Luis Serrano, welcome to Out of the Hourglass. How are you doing this morning?
I'm doing good. How are you? Thanks for having me.
I'm doing good. You're on one coast and I'm on the other, and your coast is a whole lot warmer than mine. So I think you're doing a little bit better than I am these days. The East Coast is a chilly place.
Well, it is. Yes, sunny San Diego, 75 and sunny. So
Hard
great
to
place to
complain.
be.
Good place to be. Well, we've had the privilege of meeting through a mutual shared client. You do the books for Lifetime Custom Painting, also based out in San Diego. So I always appreciate those connections made through, clients that we both work with. And I think you're actually my first bookkeeper a
Oh,
bookkeeping company that I've ever had on the podcast. So
okay.
it's great to have you here because it's such a critical role. So I'll say it's long overdue. We talked about the role with coaches. I've talked about the importance of this role and what the role does, but we've never actually, kind of gone deep with
Yeah.
a bookkeeper. So thank you for being here.
I feel super honored.
Yes.
Thank you.
For those that don't know you, can you give us a quick rundown of who you are, what you do, and where you're from?
Yeah, absolutely. My name's Luis Serrano. We have a bookkeeping firm, Serrano Bookkeeping. We're focused on QuickBooks. So we help our clients who are using QuickBooks. They're kind of the big dog on the block.
Hmm.
And, we help small businesses. We focus on trade businesses and painting companies, particularly as well in that niche, and helping our clients, be that accounting team member. You always have your team in a business
Hmm.
and you want to fill those team spots with, A players and all stars. Your marketing team, your sales guy team, and your accounting team is super important as well. So that's what we do.
I love it. It is super important. Whenever I'm talking to a potential new client, one of the first questions I'm asking, in our discovery call is, tell me about your team. Do you
Mhm.
have a bookkeeper? Because
Yeah,
I can learn a lot within the first, within with the answer to that question. Whether
right.
they have a bookkeeper, great. How often are they meeting with that bookkeeper? How often are they getting reports? It kind of opens up the ability to ask more questions.
Hmm.
But no matter, how small they are, that I want to know. We're not a good fit from a coaching perspective because just maybe they're not at the right size yet or the investment isn't there. I always say, just do me a favor. I'm going to give you one recommendation here. Get
That's
yourself a
right.
bookkeeper because it's going to
That's
make your
right.
life so much better. And as you grow, you're going to want to have your numbers in a orderly fashion. It's much easier to get those cleaned up when you're smaller than when you're bigger. So we
Absolutely.
know we know that
Yeah.
this is an important role, and we respect this role in the business. What drew you, and Serrano Bookkeeping to work with trades businesses, painting contractors versus others specifically?
There are people. We are also in a service-based industry,
Hmm.
and so we speak similar languages. We have similar goals of trying to provide an excellent service. Our accounting is similar. So while we do have clients who sell products, it's just kind of like apples and oranges, and so we're like, hey, we're orange people. These are my
Yeah.
orange people. We know what you go through. We know how to help you, even better and just commiserate on that and have similar goals of like, hey, we're trying to be excellent.
What drew you personally to this profession, and what kind of got this business going?
Yeah, great question. I think as a young age, you're just kind of counting your pennies,
Hmm.
keeping track of what you have. And so you're kind of like a little bookkeeper of what do I have? What am I spending?
Hmm.
I got to be aware of that, liking numbers, liking business. So it was a natural segue into, hey, this is a combination of the things that I like, the financial aspect, the entrepreneurial aspect. Really enjoy meeting a lot of different business owners and entrepreneurs who are not only skilled but passionate about what they do, and that's just like, hey, I like being around these type of people. This is great.
Yeah. I feel like, certain people have that you have that mindset, you have that skill kind of from early age where it's the counting of the pennies, you're attracted to dollars and numbers and seeing all of that. Your brain thinks in that kind of way.
Right, right.
Yeah. When,
Hmm.
looking at a spreadsheet, looking at QuickBooks, you know how to interpret that versus
Hmm.
someone with a different, side of the brain would look
Right.
at that and be completely confused by what
Yeah.
what do any of that mean? When people first start working, with you, what are some patterns of like misconceptions or things that you kind of need to get them on board with in
Mm.
terms of what the role of the bookkeeper does.
Yeah, I think one of the biggest misconceptions that I really try to educate clients on is there's an element of compliance in what we do, right? Like you got to do your taxes, you got to have your financials to do your taxes. And so that's true, and that needs to be done. However, approaching bookkeeping with solely that compliance then kind of devalues it because you're just not understanding, right? You're like, I'm looking at a straight, how much to get my taxes done? Cost. I'm looking at only cost. Whereas bookkeeping is much more relational. Like we're talking throughout the year. How's it going? What's going
Mhm.
on? We're talking monthly. We're talking throughout the month. So rather than solely looking at it as compliance, to view it as an investment, this will have a return. I like the saying, there's nothing more expensive than the cheapest option. So investing in good bookkeeping will have lots of returns: time
Yeah.
saving, money savings, peace of mind. You want this, right? And so approach it with, I'm investing in this, and it's not just going out the door.
I love that. Yeah, it's there's more kind of conversation that can come from a relationship with a bookkeeper than I think some people typically expect. I think it's just not about recording transactions and,
Yeah.
processing payroll. I mean, there are insights that you can get from your bookkeeper because they're the ones in the numbers. What kind of insights do you guys provide to your business owners and you think should be standard for this role?
Yeah, I think it's moving away from the straightforward delivery of like, here are your financials, right?
Hmm.
Because, while that there's the information, but the interpretation is then what's needed from that, right? Like,
Yes.
I don't know how to read a blueprint, right? So if you give me the blueprint, I'm like, okay, it looks like a house.
Yeah.
I guess,
Fair enough.
being able to say like, hey, these are the numbers, but this is what it means. Okay. So like, I don't
Mhm.
just give you financials without any context, without any understanding, without any next steps. That's really the key part of the information and the interpretation of the information.
The interpretation is huge. I mean, that's a lot too of what our coaches are doing. And it's so amazing when they get to kind of partner with a bookkeeper who is also seeing things and kind of, it makes the coach's job even easier because oftentimes a coach is interpreting a P&L
Yeah.
and then beginning to ask questions as to why. So if you can call out things that you're seeing, the coach can immediately dive in and begin to work through why is this happening? What's going on in the field? What can we do to resolve this? Because the numbers are telling the story. The numbers
Mhm.
don't lie. You
Yeah.
can you
Yeah.
can think things are going swimmingly, but the reality is the numbers are the reality. And so there's power to that. There's truth to that, but at the same time, if you can't interpret it, and I think people who can't interpret it and don't have somebody like yourself or a great bookkeeper who's doing that, it ultimately feels overwhelming and scary. And then they don't look
Yeah.
at it at all. And that's
Yeah.
how you get yourself into trouble.
Yeah.
Like if you don't look at your bank account on a regular basis, if you're
Right.
just like
Right.
a regular person and don't look at your checking account and
That's right.
things are just going out and you're like, there's money in there until like things bounce, then it's a
Exactly.
problem.
Yeah.
Got to look at
Yeah.
your statements.
Yeah. Absolutely.
There's something that my coach has referenced in preparation for this call because what we're going to get to is talk about cash flow because
Yeah.
that's a huge issue that a lot of businesses suffer with or is you can no matter what revenue size you might be or how many employees you might have, cash flow is a problem across the board. But a problem that a lot of my coaches referenced was kind of the scenario where in-house bookkeepers, they operate often in a stressful environment
Mhm.
because they know that they have to process payroll for the end of the week. They're not seeing enough cash, in the accounts to do it. They're not able to necessarily understand or get the attention from the business owner
Yeah.
to know that, and it doesn't feel like they're basically battling priorities for for the owner's attention to know
Mhm.
what to do. Does that resonate with you?
Yeah, I mean, that's a high level of stress on someone, and is creating a workplace environment for your team that it's going to be a little toxic, right? When I mean, people need to get paid, right? And if
Yeah,
you're the bookkeeper, you're like looking at your coworkers like, these people are going to be mad at me,
right.
like when they don't.
The finger gets pointed at you.
That's
Yeah,
right. Like, and I want to get paid too, right?
right.
So yeah, it can be Wednesday, and you're like, okay, we have this in the bank, this is coming out, this is what we need for payroll. Like, we don't have it, right? What are we gonna
Yeah,
do? And one of our goals is always, as bookkeepers, is to make the life of the business owner easier, right?
yeah.
We want to make your you already have a lot of things going on.
Yeah.
And so if they're on the job site and you know they're busy and you're trying to like convey to them urgency of like we need to cover payroll, right? And
Hmm.
they can maybe be hard to get a hold of. The bookkeeper doesn't have the authority to fix it, you know, so you feel the stress and you also feel a sense of like this is beyond my control,
Right.
right? And so even more stress on top of that. So yeah, it you know, and if you're doing that over and over again, then that's just like continual stress, you
Yeah.
know, at my job.
What
And, you
are
know, all up to
ways?
them for the business owner too, right? Like I'm sure eventually they can kind of feel that urgency.
Yeah, I mean, it feels cyclical. If you do weekly payroll, this is, something that
Yeah.
you're going to be having to think about every week, which is, why it probably stems the need to kind of create better processes around it. How do you recommend kind of bridging that gap? So kind of creating better channels of communication so that the bookkeeper gets what they need or gets the
Yeah.
communication time with the right people to be able to do their job and not operate in such a stressful environment.
Yeah, that's a great question. There likely just needs to be a regular check-in, and that may be weekly or bi-weekly, you know, depending on the need. If you're running a weekly payroll or bi-weekly payroll ahead of time, right, to give more runway to the issue, right,
Mhm.
rather than like we've got a day, we've got 2 days, what's happening? You know, like you said, the main driver of this is cash flow. What's the root cause of
Yeah.
this problem, right? It's going to be cash flow. I mean, the good news is that it's a fixable problem, right? Like it doesn't have to be like this is a problem I'm always going to have to deal with.
There's hope.
Yeah, like
Yeah.
this is fixable. It's simple to rectify, you know, and then you can kind of have this taken care of and, you know, not continue to have that stress, not
Yeah.
continue to be in that cycle and then move to growth, right?
Well, and with growth, you need cash.
All right.
And so let's dive into this. We call cash flow being kind of the lifeblood of growth.
Yeah.
You need capital to grow, and that can feel, well, then how do we do it? It feels like what comes first, the chicken or the egg?
Mhm.
Why do you see this being so challenging for businesses at any stage who are looking to grow? And does it change at different stages?
I mean, there can be a little bit of change at different stages, and yet the fundamentals will stay the same.
Okay.
And particularly in trades, their natural challenge is, you know, you're paying for your material and your labor oftentimes before you get paid. So you're kind of always behind the eight ball unless you've implement, you know, strategies and your systems to say we're not going to be behind the eight ball anymore, right?
Yeah.
And you know, how are we going to address this so that we can just get off this track? Because otherwise we're just going to stay there. So yeah, so you kind of, you know, say, okay, I love the cash flow as blood. Now I always use blood. Like it's
Yeah.
your blood, right? What happens if you run out of blood? You're dead,
Right.
right? So,
Yeah.
and this is the number one reason why businesses fail is they run out of cash. So if you
Mhm.
understand that what kills most businesses, it's this. Okay, let's address that so that we don't become a statistic and learn lots of resources, lots of podcasts, lots of things. It doesn't have to be like, I got to be an expert. You could just say like, hey, there's these couple levers. Let's start pulling on them. Okay. And leaning on your bookkeeper to do that. That doesn't automatically mean more on the business owner.
And I like that you say that because this is about utilizing tools. I love the analogy of the levers. We've used that a lot just internally
Mm.
what are certain triggers that we are seeing that we're going to have to pull some levers to kind of
Yeah.
readjust. But that this is also a kind of a team approach that people on the team have certain roles, are part of these processes to protect cash flow. This doesn't always just fall on the top, on the hat of the business owner who's in a lot of cases already wearing a lot of
Yeah.
hats, doing
Yeah.
many different roles.
Yeah.
Can you walk us through kind of a real scenario that you have seen in the work that you have done with different businesses where a business appears to be profitable, but the reality is they're struggling with cash flow? So
Yeah.
what appears to be true really isn't what is happening behind the scenes. And what has that
Yeah.
looked like?
Yeah. You know, that's profitable but broke.
What a terrible place to be.
What a
Like,
terrible place to be. I mean,
yeah,
you know, the profitable means like your business is viable, it works, but I look at my bank account and it's not reflective of that. And, you know, a sense of understanding,
hmm,
right? We get the knowledge and then we can say, okay, I understand where this comes from. One question that I get that I feel like is reveals this, and I get it, I'm dealing with one now, is when people, and again, it's just interpretation of the data, right? They
hmm,
say they look at their profit and loss, they look at the bottom, and they say, okay, it says I made $50,000. I don't have $50,000 in my bank, right?
Right.
So like that's the question. They're looking for that
Where's the money?
correlation. Where's the money, right? And it says
Yeah.
50 here. Where's my 50? I don't have 50 here.
Yep.
This is even more so the case when people are looking at their financials on an accrual basis,
Yes.
right? So meaning the profit and loss is counting invoices you haven't been paid for yet,
Mm.
right? And you're like, I don't have that money, like, yeah, that those invoices haven't been paid. So
Yeah.
even if you run your business on accrual, like we always include a cash basis profit and loss. Like,
Okay.
hey, like this is your cash basis profit and loss. And at the same time, there's typically we think profit and loss balance sheet. And our thing is always like you need the triangle. And the foundation one is the cash flow statement. And that has to be there. And that one's thankfully, honestly, the easiest to interpret. This is
Yeah.
where cash went, right? Where you cash positive or cash negative last month, the month before, and seeing that trend. So being sure to have that cash flow statement, being sure to look at it because I can be really profitable and not have money in the bank.
Every month when you're producing reports for your clients, you're giving what you call the triangle, the three, the P&L, the balance sheet, and the cash statement, the cash flow statement.
Yeah, I mean, those are the, kind of trinity of reports. We give them, other supplemental reports along with
Hmm.
that, for sure. And then similarly, the interpretation of the reports, right? So we give
Okay.
them summaries. That's just as important, right? Because again, we don't want to put the onus on the owner to look at this, be able to have the time, be able to have the expertise to interpret it, to be able to not only interpret it, but then to say like, okay, what does that mean now? What is next
Yeah.
from that? So
What is the difference between, being profitable but also really having a healthy cash flow balance? Like when you start working with a company and you see a healthy cash flow, are you like, hallelujah? Like, do you ring the bells? Because I could imagine more often than not. I mean, as we wouldn't be talking about this topic if it didn't exist kind of everywhere, but cash
yeah,
flow's a tough issue. And
yeah.
so when you see that come through, do you ever see that come through? Do you ever start working with a business and they have a healthy cash flow?
Yeah, I mean, it's like the gamut of people, right? Some
Yeah.
people are on the healthy side, some people are, okay, and some people are less healthy. And
Hmm.
so, as we talked about the stress, you're kind of like, okay, these people are going to be less stressed. And it's similar to like your own personal finances, right? Like if you have some savings,
Yeah.
like you're less on the brink of something happening where you're like, okay, well now I don't have the cash, right?
Hmm.
And so it's just that same level of we need to kind of have this to be able to withstand the ups and downs of what can happen, right? And, like business owners problem solve every day, right? So
Hmm.
sometimes cash flow is low. They can be putting their own money in, they can be borrowing against it, for it. Again, solutions, but like what are the better solutions?
Yeah.
So business has enough stresses, but the stress of like, I don't have enough cash, payroll is looming. This is what scuttles most businesses, right? Like
Yeah.
this is one that you're like, hey, let's get this figured out, right?
Yep.
This is dialed in, we'll be okay.
All right. On this topic of cash flow, I wanted to take a quick moment to bring in our Director of Operations and Senior Business Coach, Kathryn Freeman, to really kind of hit home on this cash flow topic and some real life examples. Kathryn, welcome to this little insertion
This
within the
little
podcast.
insertion. Thanks,
Yes.
Molly. Thanks for having me.
Yeah, of
Cash flow
course.
is at top of mind these days for so many of our clients. So I think this is a good topic for us to be hitting.
It is, and I want to kind of reiterate just kind of the conversation, the discussion that Lewis and I are having around this, and how it's like it's the bloodline of the business. And if your
There
cash
is.
flow ceases to exist or it's down in the pits, I'll say that's really kind of like a 911 situation for the company. Talk to me a little bit about, you have a couple of examples. Obviously, we're not naming names here, but like these are kind of continued patterns that we have seen amongst, clients that we've worked with over the last 20 plus years. But when I say to you, how big is cash flow a problem within just the small business world? What kind of feeling does that
No,
create?
I'm pretty passionate about it
Yeah.
because, as you said, it is the lifeblood. And, we tend as an organization, not we tend, we as an organization, the consulting group looks at your numbers in an accrual basis. We're looking at your balance sheet and your balance sheet KPIs. And, so we're looking at your balance sheet and how much money you have, but as it relates to your debt or your your overall equity, your overall debt. We're looking at your current ratios. We're not always looking at your cash flow, but it's the time of year now where cash flow becomes paramount because in many of our businesses that experience some kind of a seasonal impact, yet they might see the winter as a lower revenue and so therefore lower cash flow time of year.
Mhm.
And so that's the reason why when we're talking in July, we're always saying, okay, you need to build those reserves. You need to
Yep.
build your operational cash flow because winter is coming or some kind of a seasonal impact might be occurring. Or just maybe leads are down and you want to be able to, continue to keep moving. A couple of stories of
Yeah.
situations that either I've encountered or have occurred. We work with a couple of heavy equipment operators, and we often will have a situation at the end of the year where an accountant is saying to a business, "Go out there and unload money. Do you need a truck?" They might be doing it for two reasons. One would be to either book some depreciation, in a very heavy equipment industry, you might be in the cycle of regular depreciation. And so
Mhm.
therefore the habit that you are in is to bring on more equipment because you're accustomed to the depreciation and you're accustomed to the tax benefit. But you also might just need to be unloading cash as far as the accountant is concerned. And so looking at your roster of equipment, you might not need anything. And yet the accountant is saying to you, go out there, you gotta buy something because it's time. Go out there
Yep.
and buy something. Likewise, your accountant could even be saying, even not in a heavy equipment world, but you just need to unload cash. I remember a client a couple of years ago whose accountant said, you have to unload $500,000 between now and New Year's Eve. And the amount of stress that can actually generate. I mean, yeah, but wouldn't we all just love to spend $500,000? That sounds like fun, right? No,
It sure does in
you're
theory.
right.
Yeah.
But it's not when you have, 10 business days to do it and
Yeah.
you have to do it on business expenses, so
Right.
so going out there and finding out what kind of materials you can bring in and that you can stock. So what kind of materials not only can you get a hold of, but do you have the room to store them?
Mhm.
What kind of membership fees or software fees can you actually accelerate? Now you are in a cycle then when you are regularly renewing in December. That in and of itself is a challenge.
Yeah.
So there's a couple of times, and I'm mindful of Colin, talking about how sometimes when you've got this accountant saying to you, you need to unload $500,000, stop and think, what's the tax benefit here going to be? Because, at a 20% impact, you're saving $100,000 in taxes, but you're decimating your cash. And so this particular business then found themselves in February in a cash poor state. And they were generally a very risk averse business. And so finding themselves in a place where their revenue is growing and they've got great financial controls, but their accountant said dump the money and now it's February and they don't have access to cash.
Yep.
And all to save what might have been a 20% tax savings on it. So it's sort of a twofold kind of thing there. And so as a business owner, I want to encourage you to feel comfortable stopping when an accountant says that and saying, okay, what's going to be the benefit here? What am I
Yep.
going to save? You
Yep.
want me to do this? You want me to buy a $500,000 piece of equipment? You want me to dump $500,000 in cash? What's going to be the benefit to me? Because oftentimes we don't take that next step. And then we
Yep.
find ourselves in February without access to cash to pay our team who we've promised to keep busy during the winter months.
It brings me back to the podcast you and I did on, I think it was
Right?
kind of the accounting perspective of financials versus the kind of strategic
Yeah.
growth view of financials.
Yeah.
And both are important. And so we're not saying, your accountants are, recommending bad decisions, but they're recommending decisions based upon tax implications, which we have to keep in mind. But there's a secondary component here that is about keeping your business afloat January, February, March. And so
Yeah.
it's really understanding about making those decisions with both benefits in mind.
Right.
It's a great opportunity to talk to your coach. I mean,
Oh
these
yeah.
are the kind of conversations that you should be bringing to your coaching calls
Absolutely.
come
Absolutely.
November,
And
December, January.
absolutely. And I'm going to say like in some of these cases where you're hearing from your accountant and you've got a small window, call your coach. Like
Yeah.
don't wait for the next call. Don't feel like
No.
that's a wait. Like that's a you absolutely should be reaching out and this is your obligation as a business owner is to take all of that input and make a decision. But,
Mhm.
everybody's got your best interests at heart. Tap
Of
into it,
course.
everybody.
Yeah. And when you're starting to feel kind of even that squeeze of cash feeling tight,
Yeah.
even when, the revenue feels strong in those months, the months of May, June, July, companies still feel those cash flow problems. And,
Yeah.
Lewis and I talk about kind of what are some things that you can do, what are some, triggers to pull. But again, the earlier you can begin sensing that where you're feeling that squeeze, the quicker we can make those fixes and like the
Right.
less in the hole you find yourself.
Many of you who work with us understand we have a very comprehensive financial workbook that measures so much, from the sales to production. There's so much that's within this workbook. But we have a very simple cash flow tool that
Mhm.
we suggest that businesses take advantage of. And while most of the time we're looking at complexity and we want to understand the nitty-gritty of what's happening in your business, in cash flow times, we want to make this as simple as possible and measure what's coming in and what you can reasonably expect and what's going out and how much do you have at the end. And that gives you control over what you and Lewis are likely talking about, like what
Mhm.
triggers, like I'm going to delay the payment to this vendor by 30 days. I'm going to call them and I'm going to say, I have been a client of yours for 10 years and you know that I always pay my bills. I'm going to be late this time.
Yeah.
Stand up, make the phone call. Don't allow shame around money get in the way of the right conversation with the right people at the right time.
Mhm.
Um, because that way you don't find yourself underwater.
Yeah.
Underwater is not where we want anybody to be.
What if,
I'm sorry, go ahead.
no, go for it.
I was going to say, I had another example of a business a couple of years ago that was able to take advantage of the EIDL loan after the pandemic. This business took the loan but didn't want to put it on the balance sheet because they were not interested in scaring their management team. And that's the other thing. I was talking about money, and it's there's no shame. Money is a fact. You have it, you don't. You need it. You got to spend it. You got to save it. Those are all facts. They're not feelings. And by not putting something on the balance sheet, it doesn't allow us as a coach to help you to understand what the implication of a loan like that is. I mean, very, very attractive terms. This EIDL loan had
Yeah.
very attractive terms, but still in all, it's a huge commitment, has a huge impact on your balance sheet. And when it did come time to pay, there was a significant impact to the cash flow. And so when something doesn't go on your balance sheet, whether it's that kind of a loan or you as an individual putting money into the business, which the business should be paying back to you, or you taking money out of the business because something is happening in your personal life and you need to have access to that cash, track all of that on the balance sheet.
Mhm.
Again, just a fact allows us to have the right conversation around it and allows us to plan effectively for the cash impact that that's going to have.
Absolutely. It just on a larger scale, it's the thing that we say. You cannot plan strategically if you don't have the true story of the financial
Right.
health of the business. That's why it's so important that your numbers are clean and organized kind of as early as possible from the start of your business growth. Because things only get more complicated as you grow, as line of credits are added, as loans are added. You can't really derive the right strategy if you don't have a good sense of what you're actually working with and what actually
Exactly.
is coming down the line. And it reminds me just the importance of that coach to client relationship, and clients need to be able to kind of lay all the cards on the table. I think sometimes we see, people are embarrassed by decisions. They're
Right.
in they're in debt. They think that they can handle it on their own. So it doesn't need to be talked about, in these financial meetings. It does. Coaches can't give advice or can't talk to you about strategy. Again, if if the full information isn't out there. The coach is on your side at the end of
Yeah.
the day. We're here,
Yeah.
we're here to help. So you gotta get vulnerable in these moments. Because
Right.
again, without that cash flow, without a healthy financial situation, that business will cease to exist. That's
Yeah.
why business
It
is
will.
gold. That's what
It
I mean,
will.
the number one reason.
And that isn't to say that there are businesses out there that are experiencing tight cash flow situations and unable to push through them. The businesses that push through are the ones that are going in with their eyes wide open,
Yeah.
are aware of how how finely they are skating that line, and recognize again that this isn't personal, it's business, and are tracking everything.
And any business owner, any business who, says the times have always been good are lying to you.
They
Every
are.
business faces kind of the troughs of kind of rough times where margins are not as good, your operating profit's really low, and then you can have some really great years. Every business goes through that roller coaster.
Yeah.
It's just part of the game.
Which is why when we're on a coaching call and we're reviewing your financials, why those 30 days cash on hand and 2 months of reserves are sort of a no-go for us.
Hmm.
Things are great. Things are great right now, but make sure you have those monies in reserve.
Yep.
That way we're not having to pull up the cash flow planner and, figure out how we're going to be able to pay this bill or this bill or this bill because you've planned appropriately.
Yep. One more thing I want to ask you about
Yeah.
is line of credit. And because obviously when cash flow is tight, people want to pull from their line of credit, but sometimes that line of credit can be capped. The money isn't there. When we were talking about this, you recommended, ask for the line of credit money when you don't
Mhm.
actually need it at that point in time.
Yeah. Always ask for credit when you don't need it. A general rule of thumb, and it's a general rule of thumb. It's not the law or the absolute, but the general rule of thumb is about 75% of your AR is what a bank might feel comfortable lending you. And so, gosh, June, July, August, you're generating a lot of work. You got a lot of AR outstanding. Go to the bank then. You don't need that money necessarily. That's when banks are willing to give it to you when you don't need
Hmm.
it. Now, when you do need it, it's almost too late. I almost feel like they can smell the desperation on your skin, right? Like
They can
I
feel the
need this.
stress over
They
the emails,
they
over the
can,
phone
they can.
calls.
They can. And so, simply, it's not something that you think about in June, July, or August or September. You're not thinking
Yeah.
about it because you don't need it. But that's when I would say go out there and ask for an increase on your line of credit. In general, we as a coaching group would rather that use your line of credit to make payroll next week, to help get over the hump of a cash flow challenge. And then I want you to pay it down. Interest rates being what they are, I've got a lot of clients saying, should I be using it or should I just use my cash? And you know what? We're almost always going to say use the line of credit.
Mm.
It's what you're paying for with that interest is the ability to sleep at night. Keeping cash in your bank, nobody can take the cash in your bank. What they can do is reduce your line of credit. So I'd rather that you were using the line of credit
Yep.
and consider it a worthwhile expense. It's an expense on your P&L, so maybe then you don't have to depreciate as much.
Gosh, don't we all want to sleep better at night so we can make better decisions during the day?
Exactly. Sleep is so important.
It is. It
It is
is.
so
But it's
important.
like,
So yes, in a line of credit, I absolutely ask for more as your business grows. Your $100,000 line of credit that you got when 3 years ago is not what you need now, and
mhm.
so. I actually have one or two businesses who just on the regular every summer are asking for more. I don't even know that they're using even a third of what they are potentially getting. But the point is they understand the discipline of as your business grows, your need for credit grows, and you might not use it, but having access to it is pretty smart.
Thank you for sharing the pro tips. Always appreciated.
Sure.
And
Pro tip.
I thought it was a great opportunity just to kind of bring you in as Luis and I are talking about this. Like, what are just some like really true examples that we have seen? And it's, I could share these, but it's always wiser coming
It's
from.
always so much fun to talk about.
Yes, and you coaches see it firsthand,
Mhm.
and so it feels, you take the financial health and success of your clients personally. You want them to succeed. So I know that this is a passionate topic for many of the coaches in our
Yes.
space. So thank you. Thank you for joining us
Yes.
on
Absolutely.
this little snippet.
Yeah. Happy to do it.
We'll talk about some kind of, recommendations or practical strategies here in a moment. What's your recommendation, or what does your firm recommend in terms of what healthy cash flow looks like, or healthy cash flow on hand? What kind of metrics do you guys recommend?
Yeah, we try to keep it pretty straightforward, as simple. If ideally have 2 to 3 months of operational capital kind of saved away, particularly when things can be seasonal,
Yeah.
right? So you're like back east, right? Like we're in a snowstorm, right? Like, okay, and it keeps going, right? You're just having that to sustain yourself, right?
Yep.
To be off the brink. And once that's there, then you've got the room to start looking at growth and other things that you can do. But once you want to set that foundation, right? Because some months it's up and down, but like that'll take the stress of being like, I can't have a down month.
Yeah.
Because if I have a down month, like
you don't want a down month to ruin you. Like a down month shouldn't break the business.
Right.
I released a podcast a little bit recently with a landscaping business, and they actually shut down like between like mid-December and February, and so they don't have income coming in, but the bills don't stop.
Yeah.
And they still need cash to be able to, pay insurance, pay, all the bills that
subscriptions.
all the things, the mortgage on the property. And so they talked about practicing the profit first mentality. And that was just a behavior for them to get into kind of the practice of that. And it helps them in this, in those slow months, in those shutdowns. But it takes time to get yourself into those habits. Ultimately, they are business habits. I asked one of our coaches really quick before we came in here. I was like, "What do we recommend?" I mean, I know this from our KPIs, and I've heard it, but I wanted to make sure I had it right. Our recommendation is similar to yours. We recommend 2 months of overhead in an operating account, and then 30 days cash on hand in reserves.
Okay.
So you have as a backup. So similar, a lot of, there are a lot of clients who can achieve that. A lot of clients who are coaching to work on that. And again, it's healthy kind of habits of how do you, look at how do you take the revenue that's coming in every month, and where do you allocate, and how do you do that appropriately? But you can't do that without the right bookkeeping partner who's providing you with the most accurate information and kind of, keeping things up to date. What are some of the most common cash flow killers that you see with businesses that you work with?
Yeah, some very common ones are your accounts receivable. Right. You're just like, I've got a lot of outstanding invoices. I think that's going to hurt. Right.
Yep.
You're just waiting. So that's one. Two is just the systems to, you want to be taking deposits on jobs, on projects, to cover material and some labor, make milestone payments so that you're not just fronting everything. Right. That's going to keep killing your cash. If you're like, I front everything and then I'm waiting a long time to get paid. Sometimes I'm not getting paid. So you've got more going out, little coming in. The numbers are the numbers. Okay. So those two levers are probably the ones that will move the needle the most.
Okay.
Let's see. Some other things. What did I call it? Yeah. You can run payroll bi-weekly if you're running it weekly. Make sure if you have subcontractors, try to pay them after you get paid. You can take advantage of some like vendor accounts where you can float your material for 30 days, pay it with a credit card, get another 30 days. So, just look at what you're having and what are the key things, and then say, okay, let's pull some of these levers so that the cash flow starts improving.
It's about being strategic, right? I mean, there are options out there, and things you have to deploy, but you actually have to do them, and you have to think a little bit differently about how the business is operating in order to be able to feel like you're in a better cash position. For those companies for a lot of companies, it's just cash flow is a problem just to maintain, not even to think about growth, but just to hit payroll every week, just to, be managing it in a healthy way. But then there's the cash to grow. There's a lot of business owners who have got great goals for scaling, wanting to double revenue in the next year. But like we said at the beginning, that requires capital. Where are the realistic resources or sources where this cash can come from if you're oriented for a growth track?
Yeah, I mean, ideally, your retained earnings, the profit that you've made, the number one best choice is to just reinvest that. Then after that, you could look at financing, right? That's going to cost more because you're paying something on that. So, yeah, that's a great place to be. And I think you talk to your coach, right? Like, hey, we're ready to grow. You see where we have. The bookkeeping is like the foundation that you build everything on, right? Your coaches are going to look at it. Your tax people are going to look at it, your numbers and everything is going to be where everything builds up, right? So if you're looking to grow, you're like, okay, we've got our foundation of our bookkeeping and our cash flow. Now let's attack this growth, right? And let's allocate cash, let's make sure our cash flow is still strong. And, we talked about the levers. One that I would just say is one that I mentioned is accounts receivable, right? So if you kind of dial in that process where you're like, okay, are we taking deposits? Let's revisit that. What can we do? And then when you have an agreement, putting a payment method on file as part of that process, so that you can just automatically bill when the milestone hits or when you're done. Not only is that going to improve your cash flow, that's going to reduce your open invoices that you're waiting. That's going to reduce the time that you're spending on invoices and tracking people down. Like a little bit of tweaks in that is going to open the fountain for your cash flow. My
husband and I just completed or about to complete a kitchen renovation, and
congrats.
Thanks.
It's a long process.
It's a long process. And ours lasted about 7.5, 8 weeks. We're still on kind of some punch list items, but we've been able to be in our kitchen now for on the better part of a month, which thank goodness. It's really, I mean, I no regrets, but it's really hard to be without your kitchen for 2 months. Yeah. And especially we didn't have it through the holidays. So it was a weird time, but we were on a weekly pay cycle. So, and I was impressed. Every Tuesday we received an invoice and payment was due on Thursday. Okay. And I mean, for significant chunks of money, because I mean, renovations are not inexpensive these days. Yeah. But I don't know what I expected going into the renovation process. I mean, there was deposit, and I thought maybe every 3 to 4 weeks we would pay a certain amount. And I guess for different people, they might prefer different things, or the customer or the company, but their policy was weekly payments. And I give them kudos because ultimately, and I know it's actually a client that we work with. I know that they have a healthy AR, and it's because they have put into practice very strict AR policies. Yeah. And I commend that. And I would imagine, I mean, these businesses are hard enough, especially in the remodeling GC world. It's a puzzle of subs that you're working with and, schedules, vendor payments. If you can't be in a position to make those payments to get yourself, I mean, you don't have business ultimately. But it was nice to see, because I've been on the other side where I've paid a landscaper has come to trim the big bushes in our yard. I don't get an invoice for weeks. Yeah. And I'm like, do you want me to pay you? Like, what? How can I pay you? Yeah. So I've seen both sides of it. And I'm like, on the landscaping side, this is why you're struggling. Yeah. It's because you're not collecting your money. Yeah, yeah. And on the builder side, I'm like, well done. It was a lot because we were transferring money every week and making sure we could make those payments. But we also knew going into it what it was going to be. There was clear communication around kind of the payment structure, and they stuck to it. And that can be the make or break, I think, for a company being profitable and healthy. Yeah. Or not. Yeah.
That's an absolutely great example. They're just on it, right? And they're on it. They're not chasing down. I had the same thing. I had some electrical work done. They sent me an invoice. There was no way to pay it online. I was like, how do you want me to pay you? Yes. And now I have to go track them down today. Do you want to get paid? So it's just going to have huge returns, right? Yeah. Implement this. And honestly, if there's some fear of pushback, the customers that'll give you pushback, that's a red flag on the customer.
Valid.
You're going to save yourself time if they're like, I don't want to do that. Okay, well, I mean, what's the problem?
Yeah. Our listeners here are a mix of different, trades and different revenue sizes. So, for the smaller, especially residential companies, like you said, these are getting into weekly or biweekly payments or whatever it may be, if you communicate it and you get pushback, probably not your customer base. But even on the more commercial industrial side, I mean, protect your company's needs with your payment terms, because you can only imagine that those companies are doing the same thing with their own vendor payments. So you got to stick up for yourself. I mean, you want to look attractive, but not at the expense of your business's cash flow and operations.
And like you said, like you look more professional.
You do.
Right? Like if I'm not getting your invoice, that looks less professional than if you're invoicing me. Right. And like a few years ago, we switched to when they sign an agreement for services, it automatically has them put a payment method on file. Right. And it has the scheduling, like we don't have to go click, like I'm like, oh my gosh, this is fantastic. Like we're not chasing down open invoices or having that conversation. Like it's all up there. So there's options to say, that make it easy to say, like when they sign the agreement, part of the process is they're putting a payment method on file.
Yep.
That's going to be like fantastic.
Absolutely. And this is a great time of year if you're in a position where you think your AR system could use a little bit of a refresh because you've had some health or struggles with cash flow. I mean, we're recording this in February. I think this podcast comes out in March. So we're still in Q1. There's still such a long runway of the year to go. Like this is a great time to make those pivots, especially for those, companies too, who are seasonal or who are on, in the northern part of the country where business hasn't quite picked up yet, but will come April, May, June. This is the time when you're working on the business. And this is a great, getting your AR practices in place. This is a great time to kind of tweak those policies.
Yeah. And don't get discouraged. It's not hard, like a little bit of time is going to, an hour, maybe two.
Yeah.
Well, you have it dialed in.
And if you're not sure how to tweak it, I mean, have discussions with your bookkeeper about what cash flow needs are better. I mean, you could talk to your coach, lots of resources online about what, especially for your industry, kind of what's the recommended practice. But also really comes to know, what does your business need on a weekly basis to hit those payroll needs? What do you need to have that healthy cash flow? And let's tweak your AR policy to get you there. But to me, it all kind of, the bigger picture here is there are tools you have to have in place. And then you have to have the people. You have to have the people who can give you the information to be able to make the right decisions. That starts with a bookkeeper. That starts with, having a good accountant, having a great coach to help you understand, having a controller if you're a larger business, because it's the blood of the company. And without it, we don't survive. When people, because the bookkeeper plays such a foundational role in all of this, when people are looking to hire a bookkeeper, what are things that you would say to look out for from a red flag perspective, or to look for, from a green flag perspective?
Yeah. I think the green flag, the converse of it is the red flag, right?
Okay.
They don't have this is the red flag, right?
Okay.
And I would say ultimately it comes to communication, right? Because they're going to be your interpreter, then their ability to communicate with you is the green flag, right? Like you can have two painting companies who they can both do the painting at the same skill level, right? If one can communicate with you, this is what it's going to take, this is the time, this is, like that's the huge difference, right? Is them communicating with you. So if the bookkeeper can communicate well to you in plain English, like this is what's going on with the money, this is what's going on with the finances, this is what we're going to look out for, that's what you want to look for, right? Like the skill level should be there, right?
Yeah. That's
kind of an easy thing to say, like, can you do the job? So that'll be the key thing, right? Like, can you communicate this? And so the red flag would be like, if they can't, if they're poor at communication, if they're late, like they're non-responsive, they can't communicate discrepancies, like what's going on. So that would be my key thing to be looking for.
That's a good, I feel like that's a good point, because I feel like we have run into a lot of options or seen a lot of things in the past where the bookkeeper just gives over the reports and they think that's where their job is done. They're not ready to communicate it or, interpret it. Or if there is a discrepancy, they don't understand why. Like they don't have their pulse necessarily on the numbers. And that's what you're there for, right?
Yeah.
You're there to keep keep the pulse. What do you think the ideal rhythm for check-ins? I know we mentioned bridging the gap
Mhm.
between for issues, especially with payroll. But what's the ideal check-in for a bookkeeper and an owner, or a bookkeeper and a GM, whoever's kind of responsible for understanding the operational cash flow? What should that look
Yeah.
like?
Well, there should definitely be some check-in happening,
Yeah.
right? And so if you're kind of, hey, this is urgent, we're looking to manage our cash flow because we have zero or not much of a buffer in our cash reserves and our cash flow is running negative, then you should be meeting weekly, maybe Monday or even Monday and Friday we're going to meet. How do we do? How are we doing?
Hmm.
Um, Once things stabilize, then monthly, at the
Okay.
month end close should still be part of your process of like, okay, here are our financials, and then how's the cash flow? How's that looking? Are we still looking? And that comes back to communication, right? Each industry has their own specific, kind of key performance indicators, right?
Hmm.
And so communicating to the owner, hey, this is what's key and also what's important to you, right? Like
Yep.
let's communicate and let me understand what you need to make your job easier and give you the information you need.
Yeah, I was going to say on the flip side, like what can owners do to better, or GMs do to better work with the bookkeepers on their team? Like what can they do to make the bookkeeper's life a little bit easier? And one of those is probably respecting those timely check-ins.
Yeah.
But is there anything else that a bookkeeper really needs from management to make their job easier?
I would say it can be pretty simple. They oftentimes can like, hey, I need this because I can't move forward without this
Mhm.
document or this answer, right? So, as best you can, right? Like understand that they can get stuck. Like, I can't get what I need because I'm waiting on you, right? So, just a little bit of understanding in that regards. And then feeling heard, right? Like communicated to, right? Like, hey, you'll hear me when I'm communicating to you, interpreting
Yeah.
these numbers to you, right? Like you're taking like the numbers are the numbers. I'm not, I am interpreting them, but like they also don't lie,
Yeah.
right?
It's a
So
reality.
like,
What would you say, just to kind of close this out here, is one of the most rewarding parts of the job that you do, and the jobs of the folks on your team?
succeeding in seeing our clients succeed, right?
Yeah.
Seeing them hit their goals and their milestones, seeing them overcome those challenges, right? Where they're like, hey, my cash flow is struggling and now I'm working and now like it's not an issue. And
Yeah.
you can see like the relief and almost like the joy to get back to doing what they're doing, right? Like,
Hmm.
hey, I actually do like my job. There's challenges, but like the main challenges are moving away, and I'm making progress in there. So we're vested in their success. We're in their corner, rooting them on, helping them in every way we can.
Yeah.
Saving them time. So we just love partaking in the joy of their success, right? And seeing
Absolutely.
them move forward. Like, yay, us team, let's go.
Yeah. And then on the flip side, what's the most challenging part of the job that you guys do?
Yeah, I think it would probably still be that seeing people kind of be stuck in that cycle of challenge,
Hmm.
right? Where you're taking loans out every month to get by, and you're like,
Yeah.
oh, okay, we'll record this new loan. Next month, we
Yeah.
got a new loan, and you're like, you just feel, it's like your kids, you're like, oh, they're struggling,
Yep.
and yeah, so that's probably the challenging thing of wanting them to not struggle.
Right. Not need to take out so many loans. What's your opinion on clients taking out lines of credit, or, using financing for when, if things were healthier, they could use that cash, but maybe
Yeah,
they're in a position where they need to have a line of credit in order to
yeah.
to do those big jobs. What's your position on that?
I'm pro line of credit.
Mhm.
You understand that, lenders making money, but even if it's a stopgap of like, hey, until we get our cash reserves, like let's get a line of credit so that like if we have a bad month, we're not going to scuttle
Yeah.
because we can draw on that. So, it's a safety net
Yep.
and that can be used, as a tool, right?
Use, don't abuse.
Yeah.
Yeah.
Right, right. So, yeah, I mean, you don't want to be just racking up on there because you're like, woohoo.
Right. Right. You want to be using it to fuel opportunity,
Yeah.
or use a gap situations, not to kind of just keep maintaining
Right.
maintaining keeping you afloat every month.
Yeah.
That's when there's an imbalance, right? When
Yeah.
we need to look at, all right, how are we actually operating here? If we didn't have that line of credit, if we didn't have that financing option, would we be able to sustain this business?
Right.
And if
Right.
the answer is continually no, there needs to be some questions that are answered there.
Yeah. Yeah.
Last but not least, where if folks want to connect with you, learn more about Serrano Bookkeeping, what's the best way to do so?
Yeah. Come to San Diego, get some
Yeah,
sun, some surf.
take a
You can find us
vacation.
online. That's
Yeah,
right. Come hang out. We have a good
yeah,
time. We're online, serranobookkeeping.com. And yeah, easiest way, reach out and find
fantastic.
us. We have LinkedIn and the socials and stuff like that. So you can reach us. But hopefully in person, so we attend some events like we're
Fantastic.
gonna do next in a couple weeks.
Awesome. Well,
Yeah.
good stuff. Well, I appreciate you kind of coming on and bringing us into your world. It's a world that, our coaches know is a critical one. We always start with the numbers, and like I
Yeah.
said, if the numbers aren't coming through accurately, if the chart of accounts is messy,
Yeah.
uh, then it makes the owner's job, it makes the coach, it makes everything harder. It makes it harder to really understand where the business is truly at and where the opportunity is. So.
Mhm.
Um,
Yeah.
I always say until next time, there's always opportunity for future conversations. So, Lewis, thank you so much.
Of
And
course.
we'll say until next time.
All right. Thanks, Molly.
Thank you.